Hello once again to the Blues Talking Bamboo students. I have realized that I'm teaching you guys too slow. I've realized my mistake now. Oh no. It would be the big loss for my students. Of course, I'm really sorry about it that I was busy for a while. That's why I could not record the videos. Why I've said that I have realized. What is this realize? This is this realize with the two meanings. One is day to day meaning and another is business meaning. Realize. I've realized my mistake. It's in the negative sense if we talk about in our day to day routine or if we talk about generally. But what's the realization in business? It might be negative as well as positive. Uh, let me explain let me explain it furthermore. Like you sometimes you realize the profit of your business, sometimes the loss, mostly the profit. Of course, why you do business? You do business for earning your profit, for earning the profit. And this is the positive aspect of realization in the business. And sometimes if you don't maintain your accounts properly, and after a while you come to know that you have you have made a big loss in your business. That's the loss realization. So realization have two meaning generally. Let me explain it. When you realize your profit, basically the question should be, when should you realize your profit? Realize means basically you come to know that you're gonna earn the profit. When you realize your profit, there are three scenarios. Number one, on receiving the order. Number two, on executing the order. Number three might be the scenario on receiving payment. Payment. When, guys, if you are a company, you are a big company dealing in any kind of goods, let's say, and there comes a customer and who says that, who orders you that please give me the goods of worth rupees 50,000, and you would make the quotation first, and you would hand out the quotation to your customer, potential customer. And at that time, while making the quotation, you would know that, you would realize that rupees 30,000, let's say, that would be the cost of doing a business. And after gaining rupees 50,000, I would be making the profit of rupees 20,000, which is basically which is basically the difference, the profit between the actual revenue earned, the revenue which you might be earning after completing this order, and this is the cost of provision, completing of your order, the cost of doing business basically, and the profit would be 20,000 rupees. So would you write this 20,000 rupees straight away after receiving this order? Means after sending the quotation to the customer. What's the answer is? The answer, of course, is no. Suppose on execution of order, you realize that you have earned this rupees, sum of rupees 20,000. On the execution of order, execution means on the actual performance of the order. For example, if you have dispatched the things, if you are you have got your goods ready in order to dispatch to that customer, while executing it, you are gonna send it, the goods go out of your factory outlet, and you straight away ask your accountant to post this profit of rupees 20,000 in your books of account. Is it right? Is it right? No, of course not. Because in the first case, The reason is that the order might be cancelled later on. For example, you send the quotation, but but the customer says that he has, received another quotation with the low price. So he would definitely go with that supplier, and he won't consider your quotation, so the order will be cancelled. So in this case, in first scenario, but in the second scenario, when you are sending the goods, actually, so you would say, what's the problem now? Actually, really, I'm actually dispatching the order now. And so what the problem is, while executing the order, you can easily post this profit. It's also wrong. Why? You can't post your profit while executing the order. Actually, sometimes, the actual delivery of the goods is not possible. Why is it so? Because of, it might be because of some, traffic problems on the same day. And if the contract is time bound, and the customer has said that you must need to deliver this order on this date, so he might cancel the order. And also, due to some other scenarios which are not in your hands, like due to some natural disasters, and any other thing like that, if the delivery is not made possible, then of course you can't do it before that. Okay, so the first two are not right. What's the right time? Basically, what's the right time on receiving of the payment? On receiving of the actual payment, what's the problem in posting rupees 20,000 as a profit after receiving of the payment? I would say, of course, there is no problem. But let's suppose if you have delivered the goods, you have made the delivery in 2005, let's say, and you are receiving money or payment in 2006. Is it the problem? Of course, it is the problem. According to the matching concept, because the revenue and the expenses of the same year wouldn't be matched in that very year, because we have said that the 30,000 are expenses, and if we have, while preparing the books of accounts in the year 2000, we have charged the expenses of rupees 30,000, but we haven't we haven't, showed the profit of rupees 20,000 here. So what will be wrong? Actually, it's not at the time of receiving the actual payment. If we receive the payment in 2006, of course the matching concept would go wrong, and that would not be properly followed. So the books of accounts would be, would be showing the wrong record in that scenario. So what the actual time of realization? Actual time of realization, basically, the answer is that after delivering the goods. Yes, this is the right answer. And this is the answer according to the Sales of Goods Act 1930. This is basically an important law regarding the mercantile law. An important statute regarding mercantile law, the Sales of Goods Act 1930, and it says that the time of realization of profit is after delivering the goods. When you have delivered the goods, and a customer has recognized that he has received your order, then it's good to go to record all this transaction, not only the profit, but all this. You would be recording rupees 50,000 straight away, out of which rupees 30,000 is the cost of doing business, and rupees 20,000 basically would be the profit. It's year 2006. Let's get back to this example. It's year 2005. For example, when you have done this, you have recording this transaction, and in the year 2006, when you receive the actual payment, and you would say that it would be your asset, because this is you have to the customer to whom you have delivered these goods would be your debtor. So what is the debtor? You would be at that time debiting the debtors by rupees 20,000 in your books of accounts. So what the debtors are, basically, the debtors are, of course, debtors would be raised. Debtors are your assets, and you would be showing your asset. And at the time of receiving of the payment, you would do the transaction as the debtors would be credited and the cash would be debited, or the bank would be debited if he might be paying you by the bank. So this is the actual time. Actual time of realization of a profit is after delivering the goods, and when you deliver the goods, you are good to go to record your transaction, no matter when you receive this payment. If suppose you don't receive the payment in next year, the year 2000, and if you receive that payment in rupees 2010, and by that time you might have considered it as bad debts, those debtors as bad debts, of course, then also it would be your profit, which would be you could be actually receiving that after a while, but that is your profit. But the time of realization is, of course, this. I hope this is clear. Please like this video if you have enjoyed watching this, if you have learned something new from this lecture. Also share it with those who might benefit from it a lot. Thank you for watching. Bye. Take care.